You're listening to What's Up Digital Lending, the podcast that explores the exciting world of digital lending. We make a deep dive into the most important issues and talk to the leading minds of the ecosystem.
Hi everybody, my guests today in this episode number 17 are Gabriela Chang-Valdovinos, co-founder and CSO at Ethic Hub located in Spain, Nuno Brito Jorge, co-founder and CEO at GoParity located in Portugal, Daniel van Manen, CFO and Senior Investment Manager at Lenderhand located in the Netherlands, and Christopher Folsen, founder and CEO at Trine located in Sweden. My name is Konstantin Fabricius and I'm the host of this podcast. Today is the first time ever we're talking about digital impact lending. From our annual investor conference, the WhatsApp Digital Lending Summit, we know that this is an issue that we need to explore much more intensively. So I am all the more pleased to have 4 remarkable speakers from fintech lenders in 4 different European countries as guests in the show today. We will be talking about many important things that are relevant for investors. The prep, by the way, was a lot of fun for me. This time it took me all the way to Asia, Africa and the Americas. Look forward to an exciting conversation. And today we have not one, but 2 important announcements. Firstly, there were some interruptions during the recording. This happens from time to time and is caused by poor internet connection. I apologize for the jerky recording in a few passages, but in addition, the wonderful Gabriela Chang-Valdovinos was completely lost from a later point on because the internet in Spain somehow stopped working. But it's still a great show, that's why we decided to publish it today. Secondly, listen carefully to the following, please. The content of this podcast is expressly not to be considered investment advice, but is intended solely for your information. We do not assume any liability and will not share any profits. Okay, enough with the opening remarks. Let's start talking. Welcome to the show, Gabriela, Christopher, Daniel, and Nuno.
Thank you very much. Nice to be here.
Hello, happy to be here.
Thank you, Konstantin.
Okay, folks, please tell us a little bit about yourselves. Who are you and which company do you represent today? Please also describe your lending platforms in 2-3 sentences for the audience. And Gabriela, do you perhaps want to start?
Thank you very much. I'm Gabriela Chang, CSO and co-founder of Ethic Hub, a crowd-lending platform to finance coffee producers and export sustainable coffee. We use blockchain for these operations. Thank you.
Perfect. Thank you. Perhaps Nuno?
Hi, everyone. Thanks, Konstantin, for the invitation. I'm Nuno. I'm one of the co-founders of GoParity. And GoParity is an impact investing platform that is basically designed to allow people or companies to use their money for good, as we call it. So lend money to sustainable projects.
Perfect. Thank you. Christopher or Daniel, who wants to be next?
I can take it. So basically Trine, I represent Trine as a co-founder, now spent 9 years doing this, and we primarily focus on renewable energy, an investment platform that raises capital in the Nordics and deploy that in emerging markets.
Hi all, my name is Daniel van Manen. I'm CFO at Lenderhand. Lenderhand is a Netherlands-based European social impact investment platform. We give retail investors the opportunity to make loans to micro entrepreneurs and SME companies in the global south.
Okay, thank you. Thank you very much, guys. Really great to have you here in the show. I would like to start with some kind of warm-up part because I think it is very important for the audience to learn more about you and your personal career and how it came that you ended up in that impact lending community. And my first question to you all is, how did you come across with impact lending? Was there a particular moment in your life when you realized this is my way? Or is it just a result of your professional career?
Who starts, Konstantin?
Yeah.
You guide us.
Yeah, Gabriela.
Well, thank you guys. Well, for me, it was like a consequence of my life. It's a beautiful story. As a child, I was lucky enough as to grow in the rainforest close to where sustainable coffee is grown, shade-grown coffee, under the canopies of amazing trees with toucans, armadillos, and I thought this is beautiful, and I have to record it to preserve it for my children because it was even better in my dad's time. And then I realized, why should we accept as normal losing all this beauty? Why don't we promote and protect the environment where commercial production of coffee and nature can cope together in a harmonious way? I was head of department in the Secretary of Economic Development in Chiapas. It's a coffee state in Mexico. And I was an organic coffee producer. So I was very in contact with the problem long before finding a solution. So it was like a mission, a personal thing. And I think it's something that is very well connected to the rest of the world also.
Yeah, just one information for you guys. I met your company, Gabriela, 1.5 years ago in Riga. There was a conference of Finfellas. There you guys exhibited your coffee. And so I took this coffee back home and had the chance to drink your coffee. So yes, thank you very much. It was really a high quality coffee.
It
Very,
is.
very good.
And it's because all of the people that is participating that we are talking about global collaboration and not more charity. We don't need charity. We need the business to work properly to generate the value for everyone. So I think that we have all in common, and I'm very happy to share this space with all of you guys.
Yeah, thank you. So Daniel.
Yes, I was studying business and finance, and like most students, fancied going into investment banking. So I did my internship in mergers and acquisitions, working these crazy hours, and that was in 2006. And 2005 had been the year that microfinance was the UN. It was the year of microfinance, and it was in 2006 that Mohammed Yunus and his Grameen Bank won the Nobel Peace Prize. And so while I was doing that internship, I realized this is not for me, and I want to do something that combines my interest in finance with doing something good for the world. So I ended up working in a microfinance company here in the Netherlands, and microfinance investment fund. After some years, I did leave that field. Improve my expertise in finance and investing by going to some bigger firms. But in the meantime, the guy that had hired me at that microfinance company had started his off-grid solar business in Uganda and was raising money using lendahand.com. And so as we were connected, I thought, let's lend to his business. So I got myself an account at Lendahand, started to invest. And then a few years later, when I was back on the job market, wanted to go back to impact investing. Reached out to Lendahand, as had been active there on that platform for some time, and was able to rejoin that space. And still with the same thinking, let's use my skills in a way that's both good for the one that provides the capital as well as the recipient or the beneficiary of those funds.
Impressive. Thank you, Christopher.
Yeah. I mean, I like the kind of connection there, Gabriela, with your kind of childhood. So I'll start there as well. So I guess when me and my siblings were playing, I was always the bank. They had different stores and things, and I was always the bank, charging interest and managing flows back and forth. And this continued. And then my grandfather, he was a lot into investing into early stage companies and so on. So he brought me with him to these AGMs and on. And so I was always fascinated by that. And I guess in this world, you don't easily build a bank. In that sense, it's very challenging. But as an entrepreneur, and in that year when we started trying 2014, 2015, that was really like where you had that golden ticket, that entry ticket into becoming like an asset manager or bank, but through the new technology that came through crowdfunding. So that's really my angle, I would say, and my interest. And I think that's a fascinating part for me. Yeah.
Yeah, thank you. Nuno.
Yeah, it's really, really cool to hear all these personal stories and how they drive us where we are right now. And so in my case, in around 2009-10, I had already lived a few years outside of Portugal. And then I got a job offer to go work for a large utility in Portugal as a project manager for large renewable projects. When I had lived in Brussels before and then in Spain, and in both places, I had my money in an ethical bank. And when I moved back to Portugal, 2010 or late 2009, there was not only there wasn't an ethical bank in Portugal, as it was like peak crisis, a lot of banking scandals and banks doing stuff that they shouldn't be doing, and all of that. And so I had a few savings from working abroad, and I decided I'm not going to leave my money in a bank if there's not an ethical one. Then I'm just not going to leave it lying there. And as I knew a bit about solar power, I decided to try to start a small solar power project with 2 or 3 friends. And I convinced my stepmother to rent me the roof of a small hotel she has in south of Portugal, like in the sunniest city in Portugal. And then we realized we didn't have enough money to invest in the whole roof potential, let's say there. So that's when I started to talk to other friends and family and asking, do you want to lend money to this company? We'll start a company to own this small PV installation, and we will pay you 5% interest on. And there was actually different rates and maturities, and it was really easy to get people to lend us money. Of course, we had the trust capital, of course, but also it was tangible. It was decent return when banks were paying really little. And that's the first time it sparked in me. I thought, well, there has to be a business model around doing this, around empowering people to choose where their money is used and making a decent profit out of it, and not all of it staying in some bank managers deciding where your money goes. Then a few years down the line, I actually started a renewable energy cooperative first, and it still exists. It is now 11 years old already. And then a few years later, I started GoParity when the new crowdfunding framework came out in Portugal in 2017. So I left the solar. I meanwhile started a solar power company, and I left it to start GoParity.
Thank you very much. Thank you very much. Very interesting to listen to your background and how you ended up in this space. You have just mentioned it's Nuno. What I would very much like to hear from you guys is some kind of case studies. Case studies where the audience is able to see where you really impacted the development, and just perhaps each one could perhaps tell a little bit about the best case in his business. That would be really interesting. And because that is perhaps the best way to see how your business is able to contribute to a fairer, greener, and more social future. And please, who would like to start? Perhaps this time not Gabriela, perhaps Christopher.
For me, I think it's always fantastic to see all these megawatts of renewable energy we're kind of able to support and build across the world. But I think what really gets me going is probably all these companies through the years we worked, where we go down. So one company, Daystar Power in Nigeria, we started to work with early on, 2017, I believe. And we came there, and first time I met them, I think they were 22 in the office, and they were setting up solar projects across Nigeria. And we saw the potential, and so very early on we started to work with them and partnering up, and it's basically almost 11 million euros that we invested into them over many years. And then in the end, when they went on to like bigger financing, so in the check size of 30-50 million euros, they were 250 employees. And that is only that company, right? And then, of course, they have also, of course, so many projects in Nigeria. But I think it's just so incredible to see the progress when we can support good companies and see them scale, and also see them, of course, being around for many decades in the future. So I think that's the one I would like to highlight.
Thank you. Yes, who would like to be next?
In GoParity's case, and as you might imagine, we get this question a lot. I guess all of us do. What's your favorite project? What's your best case study? And it's really hard. Right now, we have just reached 400 projects funded in 19 countries worldwide, and we have we're not as specialized, let's say, as Ethic Hub or Lend a Hand are. That they do micro entrepreneurs, they do coffee or farming, and we're a bit more generalistic. As long as it contributes to the Sustainable Development Goals, we can, if we validate the impact, we can fund those projects. But I'm gonna be teasing Christopher here a bit, and I'm gonna choose a Nordic success story. So we have worked with a Swedish renewable energy company that they were also kind of starting when we met them. They were very much investing in Spain and the Canary Islands. And then they wanted to expand to Latin America. And we helped them fund the creation of a big pipeline of renewable energy projects, like decentralized self-consumption power purchase agreements in Colombia. And they grew that pipeline to, I think, 1.3 or 1.4 million euros raised with GoParity, so several small solar power facilities. And just last week, we closed the sale of their whole portfolio to a private equity. So I think very often we choose other stories like about impact or stuff, but if we want to talk business-wise, I think we did a really good job here because we provided the access to finance when they couldn't have it, and they built what they had promised, they delivered, and they were able to sell it. Close the whole loop, and our investors got their money, all their money back, plus all the interest that was promised.
Yeah, you have just given the keyword sustainable development goals. I will get back to this after Gabriela and Daniel have told us their story. And please go ahead.
Okay, I would say in the case of Ethic Hub, it's a collective success story. It's not just one. And here I need to explain something. I think one of the main problems in the world is disconnection. When we are in the global north, we don't understand the problems of the global south. If I tell you, according to the World Bank, a quarter of the world population is excluded from financial system, no microfinance, not anything. So they have to pay over 100% interest for the little money they can find. This is called the poverty trap. And through Ethic Hub, we are connecting Europe with Latin America. So investors, because of the liquidity, we do kind of an arbitrage. So everybody wins. And breaking the poverty cycle is quite easy and quite rewarding in this way, as money becomes a powerful superpower, I said, when you can feel proud of your profits. So imagine these small farmers trapped there without money to think if they can send 2 kids to the school or just one because they don't know next year what's going to happen. They cannot be certain about the future. And now, because they can rely on the funding that is provided for their production, they can plan for the future. They can think of a tomorrow. They can consider not abandoning their lands to be working in the United States and sending remittances, which is the main source of income in a country like Mexico, which is 4 times bigger than Spain. So it's very rewarding to connect these 2 continents to produce something positive on both sides. So stories with a name. Like Neri, it's one of the smallholder farmers with 2 hectares of land. His parents are farmers also. And now he's doing special fermentation processes and increasing the quality of his coffee. So imagine these people, 80% of the coffee in the world is produced by poor people with only 2 hectares of land. But now they can export their coffee with their name and last names, with an identity and being proud of what they are producing. And especially they've been released from the shark loans that keep them trapped. One of the beautiful stories is one of them recovered his lands. He was about to lose them because of the high interest he was increasing. So when he got the funding from the cooperative, we work through cooperatives, it's not individual loans. He was able to release his land and to keep it. So it's a lot of impact stories around here, but I'd like to say it's a collective success story because this is possible because of the connection. Our slogan is connecting people, harvesting wealth. And I think it has been working for 7 years now, and we're very proud of it. Thank you.
Before I leave you the stage, Daniel, to come up with your best case, I just want to tell you guys that I am deeply impressed by your websites. Believe me, I have studied a lot and spent a lot of time surfing on your websites, and I really like the way how you present your stories and all the background information on projects, and especially I like all the different photographies, and sometimes there are also clips that I was able to watch. Really, this is impressive work, and compared to, compared to a boring consumer loan or company loan, this is really something that goes on top. And really, congratulations to the way how you present your product. That's I think that's an important message, and it's really an appealing way to get in touch with this part of the ecosystem. But Daniel, the stage is yours, please.
Yeah, and well, thanks for mentioning that. And I do think probably all of us realize that it is really important to sell our stories well, also because the investing that we do, the crowdfunding that we do, is typically not for local companies with local entrepreneurs that are known by the crowd, right? So nobody knows those companies that we bring to our platform, and so we really need to make sure that we sell those stories well.
I just like to add, sorry, Daniel, since you're mentioning that, of course we need to sell the stories and tell the story well too, but it's also about transparency. So transparency is key to gain trust, and we need people to trust us because of what Danielle just mentioned. We're not just selling any kind of bonds or stocks or something that you will bet on. You're actually betting on a concrete story of a concrete person or a concrete company in some other country in the world. And I'm sure the four of us are very aware of this.
Yes, absolutely. That's a great addition. Yeah, so Constantine, for Lend we focus on impact in global developing countries, as we believe that each euro or dollar spent there creates even more impact than a similar dollar or euro spent here in Europe. We're also somewhat distinct, perhaps, in the sense that we mostly focus on social impact and a little less on climate impact. And that means that we're focusing on themes like financial inclusion, job creation, and improving lives. We, as I mentioned before, we do so mostly by working together with microfinance institutions. And obviously, they would lend to micro entrepreneurs. And one such story is from Oliva Chino Perez, which is a Mexican lady who is a customer of our client, Sofipa, which is a microfinance business in the region of Oaxaca. And Oliva has a workshop where she makes clothing, and it's a 40-year-old family business. And by borrowing from Sofipa, it allowed her to buy more fabric. And like with any shop, if you have more products around in your shop, more product to sell, you will sell more. So let's say the interest cost that she needs to pay on the loan to buy the fabric is more or less easily paid for simply by being able to sell more. And what is nice about Sofipa, and in Mexico we see that still a lot, it's using the classical group solidarity model, whereby Oliva, together with a group of women in her neighborhood, form a group and they support each other in paying for the loans. So yeah, it really is a solidarity model. And when she started this shop, she always used to work with her husband and her son. But because of the growth, thanks to the loans, she now also employs several workers, also providing more security of income for those families. And it's one of those many stories that we have. And as little as they are, it's the reason why we're doing what we're doing.
Yeah, thank you very much. I would like to get back to the keyword you have mentioned earlier, Nuno, sustainable development goals. I think that's very important, a very important criteria, or these are very important criteria for investors especially. And what I would like to know from you guys is, how did you initially prioritize which goals you were going to focus on with your companies? I have seen on your website these different goals, and there are differences actually, because you have different business models, but some are the same. But this is once again an important criterion for investors, and I think we should lose some words on this as well. So perhaps Nuno, as you have mentioned it, this as the first one here today, would you like to start and elaborate a little bit on this?
Sure, yeah, of course. Actually, and following up on the founder story that I shared in the beginning, at GoParity we did start only with investments in renewable energy. Then we came to realize that, well, if the real reason we're doing this is money for good, and there's so many more challenges other than renewables, why are we only focusing on this? And this was a bit of the process, not only of going from renewables to a broader spectrum, as it was from leaving Portugal to Spain and then Brazil, Colombia, and nowadays we have projects in Africa and Latin America and in Europe. We also have a subsidiary in Canada where we offer investments to Canadian investors in projects in Canada. So I would say we kind of opened up to the world and to trying to become a bigger or broader platform in a sense. But then there was the challenge, okay, but if it's money for good, what exactly is money for good? So how do we define money for good? And this is where we had to go with the best framework that we could find. And we don't think there could be a better one than the Sustainable Development Goals, which is actually something that the whole humanity is supposed to have agreed upon. So that started to be our reference framework. Of course, we use other frameworks to measure impact and to calculate impact. But as, let's say, our first exclusion criteria is, does a project contribute or not directly to any of the sub-objectives of the Sustainable Development Goals? And this can go from climate action and renewables to decent jobs and education or access to health.
Maybe we can, because we done the kind of the opposite direction almost. So maybe that could be a good other example here. So for us, we started out broader. So it was around kind of the banner people, planet, profit, that investments that is with broad impacts. So we started out with a lot of these smaller kits for families and households in Africa. And yeah, we did more or larger variety of projects. But over the years, we've seen that, and it comes back to this that a lot of us has mentioned about the trust. That trust is super, super important to keep investors and keep the community growing. You need trust. And what is trust? Well, trust is that you have as high as possible success rates, that you really pick really good projects. So we've gone the other way around. You can say that for us, we have a team very, very focused on a certain type of renewable energy transactions that we think we can do in a really good way, and thus minimizing, credit losses and delays in the portfolio. And it's not because there's not a lot of other things to do. There's a lot of other areas. It's just that we, from our side, it's easier to manage and get a high success rate. So that's why we've gone more from a wide start into a quite niche focus now.
Okay, thank you. Gabriela and Daniel, would you like to add?
Yes.
You don't have to. I just asked you.
Yes, of course. I would love to. When we start researching what's the problem with microfinance, what it hasn't reached all these farmers, we realize a lot of the secondary problem of the microfinance after the problems they were solving is that it increases debt in people. When you lend money for non-productive things for consume, then you generate a bigger problem than the solution. So since the day one, we decided that all the loans in Epic Hub were for production, were productive. So that's why our default after all these years is less than 3%, because you are financing the production of something that you are going to sell to pay the loans. It's very similar, not to what your projects are doing. So I think that solving problems, they are all interlocked. That because we started by thinking on reducing inequalities, but this is also generating decent job. This is reducing poverty. This is working for food industry. So it's also reducing hunger and protecting the environment because of the way shade-grown coffee is produced. is sustainable, even regenerative practices. So I think the sustainable development goals are like different points, set points for people to focus, but they are all interlocked because the problems usually are complex problems. So the solutions should be also addressed from these different points. So that's why I think all our projects are focused on impact. And regarding the measurement of the impact, we are very proud that 60 Decibels, which is a consultancy firm measuring the impact, validated that we are reaching the untapped markets. That's the unbanked, the people in the base of the pyramid, that if it would not be because of Ethic Hub and Hafer combined finance, they wouldn't have access to finance. So we are addressing the base of the pyramid with the problems are more complex and also more difficult to solve. But little by little and with the help of technology, we have achieving it. Thank you.
Daniel.
Yeah, maybe if I could just add for Lend a Hand, I think originally we started out by focusing on SDG 1, no poverty, and 8, decent growth and decent work and economic growth. And at one point, we also felt, certainly after Paris, that we wanted to contribute to affordable and clean energy, SDG 7. Now, for us, eventually the way we did that wasn't so successful, and we realized to have also a financially sustainable product that continues indeed to get the trust from the crowd, you need to have a good financial performance. And so we had to scale back a little bit on our affordable and clean energy. We're now focusing again on financial inclusion, but we're still interested to get back to the space of access to energy, which I think serves both, let's say, an environmental as a social goal. And so it's important that we offer, private investors here in Europe also the chance to do that in a financially responsible way.
That I would like to add what Daniel was saying about the people without access to energy. It happens to be the same people without access to finance. It's the smallholder farmers, the ones that live so far away in the countryside that they don't have access to this infrastructure. So I was saying it's all very interconnected, and I think solving the problem of energy is also a huge thing to contribute. So they are interlinked. Thank you.
Thank you very much, guys. I think now we have gained a pretty good impression of who you are and what your companies are standing for and which sustainable development goals you are going for. Let's now move over to another part of our show today. And now I would like to discuss a little bit with you the current market development. And there is a lot that I think we are able to discuss today. But beyond Trump and USAID, which I'm sure we will get to in a couple of minutes, perhaps let's start with a general view on the market. So I would be very interested in what's going on currently in the market. So what is the current state of play of impact lending? What are the most significant trends in the market that you guys see? What do we have to know?
I mean, maybe one thing interesting to kick off and also to hear the rest of your kind of views on this. But I think one challenge that we see is like, okay, you have a stable, return. You invest in real assets and projects, and these give stable return. And in the rest of the world, you see stock markets crashing, right? And everything is happening now when you see the tariffs being imposed and so on. So normally you should be able to argue that, okay, this is actually a really good case for why you should place money into private credit products such as our platforms. But yeah, so I think, but I would say a little bit, the impression I get is at least that when there is less uncertainty, the same applies to us. That is also more challenging to raise capital on our side. So I don't know if you share the same view or if you do see that being kind of an opportunity for us here the coming year.
I see this as an opportunity, Christopher, because when the United States are taking off the support, this is the opportunity for Europe to take this place on development countries. Maybe not with the funding that was usually before, but it's a great opportunity to become leaders on development, I think. Anything, even if not the 100% of what was done, but it's a great opportunity. For Spain, for example, it's an amazing opportunity for Spanish-speaking countries, no, in Latin America. And that's regarding the current situation that when it's so bad, it can only improve. No, it's the peaks that we have in the evolutions, the cycles. And in the other side of a trend, I would see something very positive. We are changing from sustainable to regenerative, because sustainable means to keep things as they are, do not harm. But we are in debt with the planet, with the society, with the environment. So we need to replenish, and that's regeneration. And it's a word that is already starting to spread more to change this focus on keeping things without hurting, with zero emissions instead of positive carbon capturation, for example, or increasing biodiversity. So I think this is a very important trend. In general, it's not just for investors or in general the companies. The regulation is moving forward that for 2030, all the companies are going to be responsible. They have to deliver a report about the impact on biodiversity caused by all of their supply chains. This is amazing changes. And I think with the technology, we are going to see a lot of evolution in these years to come.
Nuno, you wanted to add?
Yeah, I was going to say that one thing is to look at it from our perspective or from the planet's need, and I am sure that we are now more needed than ever. And of course, I agree with what Gabriela said about the shift from sustainability to regeneration. And I would have probably said the same thing 6 months ago. Right now, I think we're all still a bit on a reality shock, and we cannot be sure that it won't get worse before it gets better. I believe good things are going to come from all of this that is happening now. But I would like to talk about regenerative already. But right now, the rhetoric is even against sustainability. So we can't let sustainability as a concept be forgotten, or let those with other views take away the meaning from the word based on it's being overused or it's greenwashing or whatever. It is not. Sustainability means using less resources than what the planet can renew or give back. Just leave enough for the next generation to have. And this is a very basic and important principle that we can definitely not let go. About the market overall, what I see is the context is really challenging. When there's fear in the market, it also affects us. I agree with Christopher's view that, okay, in this context, it's better to have actual tangible loans in real companies that are not subject to Elon Musk waking up on a bad mood and tweeting something and then suddenly your stock goes down. But we still have to see how the exact macroeconomic impacts will drive or will impact the performance of the companies we have lent money to. Fortunately, I would say maybe many of us, I'm not sure if it's the case for all of us here, but we don't have too much exposure to the US. And then there's another important factor that is, since the US has applied tariffs to most of the world, actually, there still is a level playing field. It's just harder to export there. We have received much feedback from borrowers of ours, especially in Latin America, saying, well, we already liked to export to Europe more than what we did to America. You pay better and you pay on time. But right now, we want even more to work with Europe. And we are also, being European platforms, we're also a bit of a gateway for that to happen. So I think we can leverage on all of this that is happening, but I'm not sure it's not going to get worse before it gets better.
Yeah, so from my side, I think going back a little bit in time, when the invasion in Ukraine started, and then energy prices started to rise, and then inflation started to rise, and subsequently interest rates started to rise for the first time in a decade, if not multiple decades, right? And I think what happened on our platform is that first response was a drop in consumer confidence, and also people realizing, hey, I might be able to get a bit of interest on my local bank, right? So it was definitely a negative for us. In the end, let's say crowdfunding is, you could argue, a bit of a luxury product. You don't need to crowdfund, and in times of uncertainty, I think that causes people to take a step back. Over time, we were able to, let's say, increase our pricing as global yields had increased. And right now, you go to our website, you would never have seen such an attractive investment offering before. So we're actually at a good moment in time. Now, obviously, with the very recent events, we're back in turmoil, back in, I presume, potential recession, and therewith dropping in consumer confidence. So, in that sense, I'm slightly worried about the initial reaction by our investors. It could well be that they would say, "I'm going to hold on a little bit because I'm uncertain about my future." In the end of the day, I think most of our followers use our platforms not just to make money, but also because they want to do good. And in that sense, we might be more resilient than your average platform.
But one aspect that is quite interesting, I think, is that I had a webinar with our investors last week, and something that I told them that I think is very important is that in our market, especially now with what's everything going on with USAid and so on, is that throughout this history that we just talked about, right, the invasion of Ukraine or COVID and so on, what happened was that all our peers or other institutions investing is actually funded by public tax money, typically. So we are typically, next to us, you would have organizations like the, FMO in the Netherlands or Swedfund in Sweden. And these guys, in each of these shocks that is happening, they would just pull back on their investments. They would say, "Oh, we are not investing for 3 months or 6 months." They would hold off. But the certainty that we provided to the market, so as crowdfunding platforms, throughout all this turmoil, we were still around. We were still investing on a regular basis. And so I think that really in times like this, it's more important than ever, because again, since we are relying on not one and not 10 investors, but thousands of investors, there will always be a few investors that have confidence and that can take an investment decision. So that resilience that we add to the market, I believe, is very, very valuable, especially in emerging markets where capital suddenly can disappear. But in our case, we are around and we don't go anywhere, and we continuously invest. So I think that's really a very, very important role that we need to play in such a turbulent time as now. And also looking at, I don't know exactly how that is looking on the side of GoParity or Lenderhand, but for us, right, when investors are getting repayment, most of that is reinvested again. So we know that it's fairly stable, even if you might raise less capital, like the reinvestment is making the system very robust. So that's really the role I think we need to play here in the next 1 to 2 years.
Okay, cool. Yeah, we have now already heard a lot about investors, and let's switch to their perspective, perhaps, and drill a little bit deeper. And what can you tell us about the people who are investing via fintech lenders? Who is the target group? You, Daniel, you have mentioned already a little bit what kind of investor type is on your platform, but can we perhaps say it in a more general way what the investor type is? Is it someone who is only going for good, or is it also the type of investor that is going for both the good and the profit? What is it that you are facing there on your platforms?
Yeah, from our side, what I can say is that I think in the initial years it was definitely more the very progressive people, very much into the impact, if you will. I think if you want to scale, it has to be a good product from all angles, and certainly also the financial one. And I think sometimes in the past we made choices that turned out not to be the right maybe financial instrument from a risk return perspective. I think we're doing a much better job there. And recently we see an interesting inflow from investors that are actually much more closer to, let's say, the capital markets and a little less impact minded. Still, everything that we do has an impact angle, but I think it's also important to draw from the larger group of people that eventually invest to make a financial return. And if you can tap into that, then I think you can really make a difference, and that's what we're seeing right now.
Sorry, just to add on our perspective there, I think it's two things, right? So why are investors joining us? Well, because of what we just talked about, transparency, impact, that you actually get to divest from again, banks that primarily support fossil energy and so on, right? But why do they stay? I mean, we definitely believe it comes down to the financial aspects, right? So if we plot the graph of our investors and we look at the actual return, so you take all the investors since we started, and then we plot it from negative returns to 0, 2% return, 4%, 8, 10%. You would see that investors approaching 0, so that has gained plus minus 0, they might still reinvest, but they will not do fresh deposits. If you go above 6%, that's where you start to see the groups that put fresh capital in. So I would say they come to us for that reason. We are different, we are impact, we are an alternative, but they stick around and they continue to invest if you actually deliver on your promise. So that would be the short summary on our side, I would say.
Okay. Are there already institutional investors around in space? I have seen that there are platforms who offer also products to institutional investors. So what can you tell about this?
I can jump in again. Sorry, we just received quite game-changing the first term sheet here from an institutional investor of 20 million euros. And that, of course, is massive, right? It changes the kind of the volume game completely. And we think that's what you've seen in crowdfunding throughout, that you build up initially, volumes through crowd. But of course, if you can reach an institutional investor at some point, that can take you into a different space in terms of volumes. But I guess it is challenging to get to that stage. So we've done some smaller investment from the Islamic Development Bank and from the German Development Bank. But you really need to raise kind of in the range of like 50 million euros for it to work out. And I think that's the challenging gateway to pass. But we're working really hard on this in several years, and probably it's going to be another 1 to 2 years before we get there.
What we see with respect to consumer finance and to most cases of corporate lending is that larger numbers of institutional investors are pouring into the market, and simply because it is an appealing product that we have to offer, actually, and it allows stable returns and not so much risk anymore. Compared to former times. And against this backdrop, what is your expectation regarding the future? Do you think that this is a kind of development that may happen here in this segment of digital lending as well in the future, or do you believe that this is due to its specificities and to the goodwill that is very much screwed to it, very much a segment of retail investors? What is your expectation with respect to the future? What do you think?
Maybe I can go, Konstantin, because it is a very relevant question that you raised, and I am sure that having institutional investors invest alongside us, or ideally through us, in impactful projects is a trend that will become more and more a reality in the future. But I also believe that we are still far from the mainstreaming potential of both crowd lending and of impact investing. I can give you some numbers. Thinking of your previous question, you asked about what drives investors more, right? Is it interest or impact? And we ask this question very often, and we try to reply to it with actual data. So we did a survey to our users in what were their main drivers. from 1 to 5, where 1 was only impact and 5 was only return. And 3 was the perfect combination of both. And we got around 15% replies at 1, only impact. We got almost 20 on 5, only return. And we got more than 40% on number 3. So there were 3 clear peaks, but the biggest one was the actual combination of both. I can also tell you, trying to characterize our investors, we have 56% of our users are between 25 and 40 years old. We have 65% men, 35% women. Well, not 32% women because 3% didn't respond or don't identify as one or the other. And from all our investors, which are now around 20,000 from 71 different countries, we have less than 2% that are companies.
Okay, thank you.
But yeah, I would say like the big challenge on the retail side. So basically on the institutional side, I think that this is just the way it is, right? You have, if you're managing money, you need to do it in large volumes for it to make sense because you have small margins. So I think that's just how it's going to be. The challenge for us in the Nordics is that on the retail side, it is extremely standardized. So, if 98% of the retail money in Sweden will be in one tax wrapper, and where crowdfunding is completely locked out, and that means you will always be in a smaller pond that is quite limited. This is quite different in different markets. So in some markets, crowdfunding is more compatible. So in the UK, for example, you have that ISA account access even with crowdfunding. So I think that is the problem, to be honest. So that to get retail on mass scale, we would probably need to be more compatible with the normal financial system for us in the Nordics, at least. That's what I can speak for there. Because a retail investor, they would have their funds with a neobank or their normal retail bank, and they don't want to have and manage money in 5-7 different places. So that, I think, is what creates this ceiling of potential of clients we can reach out to. And that's the challenge that the crowdfunding still needs to address. I think, unfortunately, with the new EU legislations, where the ECSP license that came out, that has not been able to address that. And I think that's really the core challenge that needs to be fixed in order to align with the rest of the system. Yeah.
Okay. Yeah, interesting. Yeah, let's perhaps drill a little bit also into credit risk assessment. We have heard already from you guys today this and that, but I think for the investor perspective, it is very important to understand how exactly you perform your credit risk assessment. And this is in particular true as most of the project owners obviously are pretty far away, aren't they? And so how do you perform credit risk assessment sitting in Europe and financing someone who is in Asia or in Africa or in Southern America?
Yeah, I can kick it off. It's actually rather traditional. I mean, we call ourselves Fintech, but when it comes to due diligence, I think it's rather traditional. So in our case, it all starts, let's say, with collecting data from the investee company. So what data and information are we talking about? Obviously, audited financial accounts, a financial model, a business plan. We'd like to see corporate policies. So we study all that, and then we perform interviews. We used to do that always on site. These days, actually, since Corona, we are often comfortable with remote due diligence. That's also because we're now focusing on financial institutions, which it's still always preferred to do an on-site due diligence, but it's a fairly standardized, let's say, product and service that you can well understand remotely. What we also do is we will always have reference calls with a number of the existing lenders of the institution, potentially shareholders of the institution, sometimes clients. That all comes together in an investment memorandum. We present that to a committee of external and seasoned impact investment professionals who would then give their recommendation on the investment. So yeah, rather traditional approach. Although I do think that we move faster than let's say more traditional funds and banks and lenders.
Okay, thank you, Daniel. Nuno, how do you perform credit risk assessment at GoParity?
Yeah, so it's a big part, of course, coincides with what Daniel just described from Lendehand. We actually usually start, we have purchased access to at least 3 different business intelligence platforms that allow us access to the most recent information about companies, mostly worldwide. One of them is only based in only provides information for Europe. So we try to do an initial pre-assessment on whether there should or not be viability there. If there is, then we move on to what Daniel said, the typical audited accounts for the past 2 or 3 reporting years, the business plan, etc. We have the filtering also there. So that's where we validate that the use of funds will actually contribute to the Sustainable Development Goals. And we actually call it the triple due diligence because we look at the company, the project that they are funding, and the impact that they claim that they will have. If everything is in order, let's say, then that project is given a certain risk level, which for a certain maturity corresponds to a given interest, and then those are the terms that we propose to the borrower. One thing that is really important is that we always take assets as a collateral. So we use, let's say, a guaranteed credit in any manner. So if there's assets that will be acquired, they have to be given as a collateral to our loan. If no assets are acquired, the borrowers can suggest assets that they own. We have taken buildings and land and different types of assets as a collateral to our loans. And alternative, there we can also take corporate guarantees from the holding companies or from even shareholder or founder personal guarantees, which we don't love. But if it's the only case and they are willing to do, we can also do it.
And on the side of Trine, super quick, I think, very proud of this. As I would say, it's one of the, 80% of our company is the investment team. And they are not based in Europe, so they are in our respective markets. And since the launch of our investment strategy in 2019, actually, so that is around 6 years, 50 million euro invested. We have 2.27% credit losses accumulated for that entire portfolio. And it's really about kind of being very specialized on a certain type of projects and following up on them very regularly every quarter. So that's been our way of working, and of course, then it's I can speak for hours on this, but it's really about making sure that these portfolio of solar projects are able to service debt, so that you very focused on cash flow analysis when you look at this.
I can also make a confession from GoParity's side. We have taken some inspiration in some of the things that Trine does to inspire our approach to risk, namely having local people also looking at, when some markets like, let's say, Colombia grew really big for us. It is now our 3rd market after Portugal and Spain. And we have decided to move on with having an actual, we still don't call them investment managers, but we have an actual finance specialist in Colombia that knows the ecosystem really well and the financials there and how to look at all of these aspects locally.
Can you guys perhaps tell us a little bit more about returns and default rates? And we have just heard here and there from you some figures, but I think this would be very interesting for investors as well to just imagine a little bit better where you are.
So I can start on my side. So we have 2 sets of investment strategies. So historically, when we started the company, there was rural electrification. This was the first years up until 2019, 2020. Here it was around, an annualized credit loss of upwards 8%. So it was almost taking the entire return for investors. For these years, the return for investors was between 0 and 3% return of net returns. We shifted completely 2019, 2020 into this new strategy where we have the same number I said accumulated would be around 1% per year in credit losses. And if you see like net returns that are in the range of 7%, so that's where we are at the moment.
Okay, cool.
Yeah, on our side, I think we clearly need to distinguish between our financial institution lending and our SME lending. And as I alluded to before, we've paused our SME lending, which was mostly in the off-grid renewable space because of the poor financial performance on our side. So if we just look at the product that we're currently offering, which is lending to financial institutions, we've been doing that since 2013. The default rate, the write-off rate since that time is 0.5%. The IRR is above 4%, but that was in the beginning in a low yield environment. If you just look at last year, we offered an average interest rate of 6.7%. And so if you would still assume this historical default rate of 0.5, your net return would be still well above 6% at the moment.
Mm-hmm. Cool. Thanks. Nuno?
Yeah, in our case, so overall, if we look at our project portfolio, since ever we have an offered average interest rate of 6.23% per year and a 3.2 average maturity. Of course, if we consider only, let's say, the past 2 years, it goes as high as 6.9 on average. And we have percentage of non-performing loans of 4.42%. And we are now all very obliged to be transparent about this in our web sites. So any prospective investor can visit our statistics page at GoParity, just like any other platform, and everything is available there because of the new European crowdfunding regulation. A lot of interesting information there.
Yeah. One last question to the benefit of investors, and I think it's not so unimportant, and this is how you handle defaulted debt. It is an important question due to the fact that, once again, your project owners are pretty far away. So sitting in Europe, handling the loan or debt. So how do you handle defaulted loans, for instance? How do you deal with it?
I can start maybe. So in our case, GoParity, even if we have lent money to projects in 19 countries worldwide, we have almost only funded companies in Europe exactly for this reason and another one. One is for, in the case of arrears, to recovery processes easier and judicial processes smoother, but also to avoid currency risk. These are the two main reasons that made us work only with European Union and mostly Euro area countries. Where we have opened exceptions is in Canada, where we have a company of ours. So, of course, we look at it differently. It's loans for Canadian businesses with Canadian dollars. And in Colombia. And in Colombia, we did go through a 6 to 9 month process of preparing to offer loans directly to Colombian companies because we saw the opportunity there. So there we do have our fiscal advisors in Colombia. We have local people. We have, of course, our legal counsel in Colombia. And so all the preparation and recovery is dealt directly from Colombia. All the rest, we have 2 internal lawyers at GoParity to manage all the legal processes. And our operations team also has pre-litigation procedures. So we have sort of sorted out between early alarms that start 10 days before each of the scheduled payments, and they go up to 90 days after the company has failed the payment. From then on, we move on to court. So we have a very well-established procedure that has different deadlines between day -10 and day 90 in recovery. After day 90, we stop managing arrears internally and move on to court procedures.
Okay, thank you.
Yeah, on my side, maybe can take kind of general and then one example. So again, we specialize very much on the type of companies, type of assets, type of projects we fund, and the reason for that is because of recovery. So what happens? To take one example, Redavia, a company that we funded. So when we take a position like that, we take collateral. And what happens in such a case is that we typically have other companies in the same markets, that we reach out to find another operator. So in this case, the operator went insolvent, and we then identified other companies to take over the portfolio. And then you go through a process of transferring assets to the new operator, and that way you typically have losses of value for investors, but you have the least amount of losses of value to investors. So that is what we've done in most historic cases when you have still assets operating and producing cash flow on the ground. But it takes a long time. So, I mean, the investment managers that structure transactions are the same to take care of the transactions if something like this happens. And it can really take years. It can take 2 to 3 years to take. But again, for us, it's extremely important to do this, again, to build trust. But what's most important is to avoid cases going there, right? So that's why you need to have a lot of due diligence measures before. But that's how we work on that. But it's long lead times.
Thank you. Daniel, would you like to add?
Yeah, I think most relevant things have been said, but I would, let's say, concur with Christopher's last remark. The most important is to prevent these situations, right? Because however strong your legal position is, it's going to take years and years of negotiation and trying to get to a solution. So I think in our case, we've definitely, let's say, raised the bar as to what type of businesses do we allow to raise on our platform. And I think we've also tried to come up with some mechanisms whereby, for example, through smart covenant setting, we get out before the trouble really gets too big to get out, if you will. Because again, once you enter into these restructuring and renegotiation processes, it takes a lot of time and effort from the team, and you definitely want to prevent that.
So, yeah, thank you very much. That was really very important as well to learn more about how you deal with the investor perspective. Thank you very much for your time, guys. That was really a very interesting show. And I hope you enjoyed it. And unfortunately, we lost at some point Gabriela due to bad internet connection. And I really apologize for this to the audience. But Nuno, Daniel, Christopher, thank you very much.
Thank you.
Thanks a lot, guys. It was really a pleasure to have this conversation. We should do this more.
Absolutely.
Yeah, sure. This is a show that is made for the ecosystem, and we really want to do this further on a regular basis. Yeah, thank you everyone for listening. You have hopefully enjoyed this episode as well. Please make sure you subscribe to our podcast. And save the date already today. The 3rd Digital Lending Summit is going to take place in Frankfurt on 1st of October. More information in our show notes. Stay safe and sound and see you soon.